So I was able to be approved for a mortgage without ever having to pay any interest and without ever having to go into any debt prior to qualifying for the mortgage. So, how did I do that? I did that with credit cards. Now, I know what you're thinking. Credit cards are the devil. The credit cards are evil, they get people into debt, blah, blah, blah. I want to tell you that that's not true. I know you've heard many bad things and bad stories about credit cards, but actually, the way that you should see a credit card is kind of like a kitchen knife. A kitchen knife is a wonderful tool if you use it correctly. It can help you make meals, cut up veggies, eat chicken, whatever you want to do with the knife. But if you use the knife incorrectly, if you don't know how to use the knife, then you're going to cut yourself. That's how a credit card is. A credit card can be good or bad depending on how you use it. So, to build a great credit history and foundation, credit cards is one of the best tools for that because a credit card is one of the only types of credit accounts that you can open where you can make it so that you never pay any interest, and you can make it so that whatever effort you make with that credit card, it'll continue to pay off potentially for the rest of your life. Why? How does that work? So, a credit card is an open ended credit account. What that means is that once you open up the credit card, as long as you use it every once in a while, the credit card will continue to stay open and be active on your credit report basically forever or for the rest of your life. And so, it's a really good investment to start building your credit history with a credit card because it will continue to pay dividends for potentially the rest of your life. And so, I love credit cards for that reason. Other types of credit, like auto loans, student loans, even mortgages, what those have in common is that they're closed end credit accounts. So that means that at some point you eventually pay them off. And once you pay off a credit account, it no longer is active on your credit report. It actually reports as a closed account. And if that's the only thing that you had on your credit report, I've seen it before. I've been working in the banking industry for the past 11 years. I've seen people that the only thing that they had on their credit report was a mortgage or an auto loan. They didn't have any open credit cards and their score went down to literally zero. And so it's very important to keep active accounts. And credit cards are awesome because as long as you use them every once in a while, they'll stay on your credit report forever. So you want to build your foundation of your credit history on credit cards, not on auto loans, not on personal loans, not on student loans, because those eventually will go away. So you want to build on your credit history on a foundation that will last potentially for the rest of your life. And credit cards is how you do that. So, first of all, if you have no credit history at all, your first step is to get your first credit card. Now, here's a catch. If you have no credit, it's difficult to get approved for credit when you have no credit. It's a little bit of a catch-22. So, a hack to kind of overcome that initial constraint is basically to go to a local credit union, potentially a local bank, and they should have a secured credit card product. And it's very simple. How it works is all you have to do is just save up enough money to put a security for that credit card, and then usually that credit card is automatically approved even if you have no credit history. So you just put up the security, they give you a credit card in return. It's safe for the credit union, it's safe for you because the money's being held as a security in the event that you are dumb and you don't pay your monthly payment on time. So let's say that you got your credit card in the mail, it's in your hands. What's the next step after that? The first step that I would do is take that credit card and go on your online banking and set up the credit card to be paid automatically every single month for the full balance. Not the minimum payment, but the full balance. Why should you do this? This will ensure that you never pay any interest on this credit card. It'll also be serve as a check to make sure that you never spend on that credit card more than you have in your checking or savings accounts. It's a little bit of a mental check to make sure that you don't overspend as you're trying to build credits. So you get the credit card, you set it up on automatic payments, and then now what you do, the first few credit cards that you get, more likely they're not going to have any rewards, and just use these credit cards as a tool just to build credits. The rewards, the benefits, all of that will come in the future once you already establish a much better credit history and credit score. Initially, you're just using these credit cards for the purpose of building credit. So my next step after that is to go to look at your budget and see if there's any bills that you pay with your debit card or that you can pay with your debit card. There's things like phone bills, car insurance, Spotify, Netflix. Any of those will work. Maybe pick your Spotify, your $10 a month that you pay on that. Go to spotify.com, go ahead and set up that credit card to pay your Spotify monthly. Set it up so that it's every month it just gets paid from the credit card. And then you have the credit card being paid automatically from your checking account. So you just kind of automated the whole process of building credits. You don't have to go out there and use the card for everything. In fact, in the short term, if you do that, it's actually going to hurt your score in the short term, because one of the biggest parts of your credit score, what makes up your credit score, is how much of your credit card limit you actually use. So actually, if you just use the credit card for a small purchase like Spotify or Netflix, that'll ensure that your score is always maximized to its highest potential in the short term. Later on, as you get higher and higher limits across all of your credit card accounts, then you can use your credit card for groceries and dining and all the other stuff. But initially, just focus on paying one small bill with that credit card, automate it, set it and forget it. Maybe use your debit card for everything else. It's better to be focused than to try to do too much. Do that for about 6 to 7 months, and then after that, your score will go from 0 to about 650-ish or so. That's just what I've seen as a loan officer working for a credit union. I've seen that that's generally what happens after 6 to 7 months when they first get their first credit card or secured credit card. Once you get that credit score in the mid 600s, you'll probably start getting offers in the mail for other credit cards. Now, I know what you're thinking. Yeah, don't get another credit card. Actually, in this situation, you do want to get another credit card, because remember, you're trying to build a credit portfolio. You're trying to build almost like a resume of your credit history and how good you are with paying bills on time. It's not just on one account, but on multiple accounts at the same time. So go ahead and apply for that second credit card. Wait until you get a pre-approval offer, and make sure that second credit card, it has no annual fee, and it doesn't matter what the interest rate is. It doesn't matter if it has rewards or perks. Again, remember, you're not going to be benefiting from that anyways, and you're not going to be paying interest because you're going to be paying off your balance in full every month. So get that second credit card. Repeat the same thing as credit card number one. Set it up for to pay one of your monthly bills. Automate the whole process. Wait another 6 to 7 months. Then see if you get any pre-approval offers in the mail for a third credit card. Go ahead and apply for that third credit card. Again, make sure it has no annual fee. And then repeat the same process with the third credit card. Then the fourth credit card, the same thing. Just do it in 6 to 7 month intervals. The reason I recommend that is from what I've seen based on my own personal experience and from seeing thousands of credit reports over my career working for a credit union, that's about the ideal time that you want to wait before you apply for another credit card to maximize the likelihood that you get approved. If you do it too early, then you probably might get denied just because you did it too early. You're not spacing out your inquiries. And if you wait too long, sure, you can wait as long as you want to. It's just that now it's going to take you a much longer time to get to the goal of having enough credit history to be able to do what you want in life. You'll eventually get a mortgage and get the best rates on auto loans or whatever you're going to do in life to get a good credit score. So you got the 4 credit cards. Now your next goal is just all about time. Just let those 4 credit cards age out, and you want the average of those 4 credit cards to be at least 2 years. So if you take the average length that they've been open, the average of those 4 should be 2 years. Once you get to a 2-year average credit history over 4 different credit cards, you will have a much easier time qualifying for a mortgage, for an auto loan, whatever you are looking to get approved for. You're going to have an easier time doing so once you have that 2-year average credit history over at least 4 different accounts. And if you did it correctly, the way that I prescribed, you would have never paid any interest, and you would have never gone into debt if you do it the way that I prescribed. Now, a lot of people say, well, what about a mix of credit? all of that, that's fine. Think of the mix of credit as a byproduct of having good credit history. Yes, eventually you probably will get a mortgage. Maybe you will get a auto loan in the future. You will eventually get the mix of credits. So don't worry about the mix of credits, and don't worry about rewards or anything like that. That'll come in the future. That's a byproduct of building a great credit score. This is what I think is the maximized effort that you should put into building credit. If you do these things, you will have great credit history, and your credit will continue to get better and better and better as you benefit from that foundation that you've built. When you start getting your mortgage or auto loans or any other types of loans that you eventually get in the future, home equities, then all of that will just kind of continue to expand on your credit history. I'll make more videos about a little bit more intricacies to building credit, just again from my own personal experience and from working in industry for the past 11 years in direct lending.